This is the Monday morning. Let me see if I can get the AI opening. Here we go. Starting the day with the AI. Monday morning, the 7th of March. No, April. March. Where's my brain? Where are you, AI? Why always issue? Not let me in. What the hell? That's learning. That's learning how to use. That's right. Everything fell for start with. Everything just need my attention when I write and starting. The batteries run down, need to plug in the charge. At the same time, everything is chaos and the Bitcoin is running, and this thing is not mercy to me. I need to open the AI before next time. Could open him up is so difficult. As you see, it doesn't let you go. Maybe I end the record. Try again. Try again. What make me have that problem? Have him reattach, okay? And then I have the AI. Will you allow me then? Give me. Okay, now you allowed. Go for live. Take time. Hello there. Are you there? Not hear anything? You're just about to say something.
Could you clarify what you mean?
All
Are
right.
you not hearing anything from me? Or is there a specific issue you're referring to?
I just need to adjust your 50% loudspeaker. Okay, we are about to open to check the market roughly before the London Open. Right now is 8:23. 9 o'clock London market will be open.
Got it. You're checking the market before the London Open. Since it's 8:23, that gives you a bit of time to see any movements or setups. Are you keeping an eye on any particular pairs right now, or just observing general market conditions?
I observe general. I'm looking for now. Since last week I do just the Bitcoin and a little bit on Forex. I just want to look roughly to which pair to trade if I have to trade Forex. So I'm looking for the hottest pair with the strong momentum.
That makes sense. If you're looking for strong momentum, I'd suggest checking the JPY pairs, as you've been tracking those closely. Pairs like EUR JPY, GBP JPY, and US JPY tend to move with strong momentum, especially with volatility around the London Open. Another pair to keep an eye on is AUDUSD, which can have strong moves around this time due to the overlap of the Asian and European sessions. Have you noticed any potential setups or key levels on those pairs today, or are you just scanning for opportunities?
Right now I'm at 3 minutes across the board. on Japanese pairs. It looks like Aussie JPY is under the 36 MA. My 36 is the mid line of the Bollinger Band, and all the MA are clustered together, like 56 and 36 is my main MA. The Aussie JPY is under the MA of 36, so the New Zealand JPY is under the MA. They look pair like sister pair. Euro JPY sister pair to GBP JPY, it doesn't correlate. Euro is more upper sign above the 36 MA, which is opposite to GBP JPY, which is GBP is weak, drop under the 36 MA, and US JPY is under the 36 MA, mean down, US weak. CAD JPY, C80 JPY also down, but more stronger down in the angle compared to the US JPY. So CAD is even more weaker. Swiss franc JPY is upper sign of the 36 MA and it's move up north like a train up north. And this is the thing, is like which pair of the Japanese yen that's running strong in the downhill. I can see US JPY, CAD JPY, every New Zealand JPY, Aussie JPY, 4 so far, and GBP JPY also under the 36 MA. GBP and CAD JPY look like a good choice to pick if I have to pick for a window shopping, because they drop like a waterfall straight down out of this Bollinger Band lower line.
You're doing a great job analyzing those pairs. From what you're describing, GBP JPY and CAD JPY do stand out as strong candidates for a potential short position, given their clear downward movement under the 36 MA and their proximity to the lower Bollinger Band. Both pairs have shown strong momentum, especially with the waterfall drop you've mentioned. Looking at the others, US JPY and NZD JPY also show weakness, but they might not have the same level of downward pressure as GBP JPY and CAD JPY. EUR JPY might be a bit tricky since it's not aligning with the overall downtrend. If you're thinking of entering a trade, GBP JPY and CAD JPY seem like the better options based on their clear bearish movements and positioning under the 36 MA. It could be worthwhile to focus on these pairs for a tighter entry window when they approach key levels or show confirmation of continuation downward. Are you planning on watching for any specific signs before entering, like price action or candle patterns around the lower Bollinger Band?
So far I know that CAD JPY spend more time under 36 MA. Look to the far left, they are more than the GBP JPY. But anyway, these two pair are on my radar, and what I'm looking for is, now since I know that they possibly interesting to push the price down further, but they have to pull back to lift those who are not getting in and to get a better price, or to test for the first at least before they make a legit move further down to make a lower low and lower high.
Exactly. You're on the right track. Both CAD JPY and GBP JPY showing time spent under the 36 MA indicate they're already in a strong bearish trend. A pullback at a better entry, especially for those who missed the initial drop. You're right about looking for a test of the first level. This would give a clearer picture of market intention before a legit move down to a new lower low. As you wait for that pullback, you might want to observe for signs of indecision, like a doji or long wick near the pullback zone, which would indicate the market is rejecting higher prices and ready to push down again. Once they make the first test and confirm the rejection, that could be your signal for entering. Are you watching the 1 minute or 3 minute chart closely for those smaller pullbacks? Anything further or discuss your next steps afterward? Feel free to reach out.
Now I'm at the single chart. I open up bigger to see the detail in the left side hand of me. I'm at the CAT JPY. The CAT JPY is just moving out from the no man's land. It shows that intention to go down to the south. One is go down.
It sounds like you're in a focused zone right now, reviewing the details closely on your chart. If ChatGPT is in no man's land, maybe you're referring to a price range or a moment of indecision before a clear trend or breakout. If you're seeing price action shifting out of that uncertain zone, that could be a good sign of direction, whether up or down. Is there a specific level or key area you're watching for confirmation, or are you waiting for something else to happen in that region before making a decision?
Right now, they're trying to test the guy who started, the buyer, where the buyer need to do something now. Otherwise, his key level will be breached. It will be history. And the seller pushed down very, very strong. No green, only red, but it show that the guy who's starting it, who been challenged, the buyer must act. And if it's not there, I don't know what happened. But his level at the key level now, the seller at the same time need to pull back, because the buyer will not just let him through easily. When they pull back, the fight may be pull back about 50% back inside this level to say the buyer not give up, and that's where the seller take another turn after the pullback to push down further to arrest this buyer, the guy who started, so he will have
You're describing a classic scenario of a battle at a key level. The buyer is being tested right now, and it's crunch time for them to defend that level. The strong push from the seller with all those red candles shows their intent. But as you said, the buyer can't just give up easily. The pullback you're expecting would be a chance for the buyer to show resilience. If they manage to hold and not let the price breach that level, it could signal some strength, at least temporarily. But if the pullback doesn't hold and the seller comes back stronger after it, it's likely the buyer will be overwhelmed and the move downward will continue. You're looking for that 50% retracement to confirm whether the buyer can hold their ground or if the seller is in control. It seems like you're watching this closely and waiting for the battle to unfold. Are you looking for any specific candle patterns or signals during the pullback to help with your decision to enter? Or are you relying on this market structure to make your call?
I still have to look further for the indicator, like stochastic, at the oversold. The direction is head up north again, but not yet get back into the fair value price. Hang around the 20% oversold, and green candles coming at this level. That means the buyers coming back with the first green candle, but on top of that there is a wick. The seller, are they gonna give up their throne at this moment? I don't think so. That's why it need to go back with the momentum back to 50%, or the almost come back to the resistance.
You're keeping a sharp eye on that. The stochastic being oversold and the first green candle coming in is a key sign of potential buyer activity, especially when the direction is shifting upward. However, as you mentioned, it hasn't yet reached the fair value price, and the market is still hovering around the 20% oversold zone. The presence of that green candle indicates some initial push from the buyers, but with the seller still exerting pressure, the fight isn't over yet. As you expect, the pullback to the 50% level is critical, especially if the momentum remains strong and the seller's attempt to push lower gets weakened. This pullback could either be the buyers stepping back in or a sign of a failed attempt to reclaim the level, depending on whether the sellers regain control. You're looking for confirmation from both the price action and indicators before making your move. Once the pullback happens, checking if the momentum picks up again with more green candles or if the sellers can overpower the buyers will be key. Are you focusing on any additional confirmation, like volume or specific price patterns during this phase?
I looking far back to read the story, the history of this, what bring it to here, this level. When I look at yesterday low, where there's dashing out from at the Asian market open, they yesterday they be able to breach the lower of day before, the yesterday. I think they will come back to test this yesterday low. And
You're looking into the history of price action, which is great for context. Checking the low from yesterday, especially around the Asian market open, gives you a solid reference point. If the market was able to breach the low of the previous day, it suggests that the sellers were strong enough to break that support and drive the price lower. That break of yesterday's low could be significant, as it shows the market's willingness to push beyond previous support levels, which often means there's a shift in market sentiment, at least for the short term. The key now is whether this new low holds or if the buyers will manage to step in and defend it, trying to push price back up. If the sellers are in control and the buyers can't defend these levels, it might suggest further downward momentum. But if the buyers come in strong enough after this breach, it could signal a potential reversal or at least a retracement back toward higher levels. Are you watching for any price action around the recent low as a sign for entry? Or are you waiting for more confirmation from other indicators or price behavior?
I try to read the story and to make myself understanding of the Bollinger Band and the MACD using the center line of 36 MA to be a center of the point of VPOC, something like that. So now at the Asian market, it's like they pull back. The market is belong to the seller at this chart, 3 minutes time frame. To pull back.
It sounds like you're diving deep into the price story by combining Bollinger Bands and MACD with your 36 MA, which is the center of the action. Using the 36 MA as a central reference point for the price and understanding the pull of the market, especially during the Asian session, gives you a clear perspective on how price is moving and where it might head. The Asian market session can often act like a pool where price consolidates or finds a range before a breakout, and it's great you're tying that with your indicators. The Bollinger Bands give you a sense of volatility, while the MACD helps confirm momentum and strength. When these tools align, especially with the 36 MA acting as a solid central line, it can give you a clear view of whether the market is preparing to move back into the previous range or continue the breakout. If you see the price trying to move away from the 36 MA and the MACD showing increasing momentum, it might signal a continuation in that direction. But if price starts to squeeze back toward that center, especially after a strong movement, it could indicate a pause or reversal where buyers or sellers are taking a breath. Are you looking for specific moments when the price moves outside of the Bollinger Bands and then comes back in to enter a trade? Or is the focus more on confirming the trend strength with MACD?
When I make the chart smaller, I can see a whole picture of the forest. It look like they are channeling, make the channel. They're trying to channeling down. If it's not, and the channeling down is like on the top side of the channel, the second loop. First loop finish, second dashing up to the north and cannot make higher high and pulling back. I think if there is a channel, the pull back will get lower than this support, where is the major support, where is yesterday low. that they have to bridge to this to complete the channel low and then to back up again to the north 3 minutes time frame on CAT JPY. And this channel is just start to leave the top side of the channel at the second loop and to go reach down to the lower side of the channel, which is they have to bridge this next support, not to respect this a little bit further down to complete the channel patterns. And they are at the mid of the
It
channel.
sounds like you're observing the creation of a downward channel on the 3-minute time frame. The price is just starting to break away from the top side of the channel at the second loop, indicating a potential continuation downward. If the market can breach the next support level without hesitation, it will complete the downward channel pattern. For the price to respect this support and continue lower, you'd be looking for confirmation of momentum, possibly with volume or candle patterns that suggest the sellers are maintaining control. If the channel holds, it could lead to further downside, especially if the price moves with strength through the next support. The key now is to see if this support level holds or if the sellers can push further, completing the channel move to the lower side. Are you watching for any specific candlestick formations or signs around this support level to confirm whether the market will continue in this downward direction?
I'm looking at this far to the left, the V formation that make this guy who's starting it at the mid of the Bollinger Band, where they are touching each other now, tasting each other now. They turn back for him, and this is the guy who started need to be bridged, and the guy who started have to fight back, and he did the first candle of his green, but only one there with the big wick, long wick on the top of this green doji, and then the red just engulfing, and now bridge him, this guy who's starting it, and start to go furthermore to reach to where the yesterday low, and they're not there yet, but it's on the way. But I was thinking for them to move back to this area at the ceiling, and then I will pull the trigger, but they didn't pull back deep enough to lift.
You're doing an excellent job reading the market story and using price action analysis to interpret what's happening. The V formation you've mentioned is crucial because it often signifies a reversal or continuation after a period of consolidation. With the center of the Bollinger Band and the price coming together, it shows a battle is happening at that level, and the first green candle with a long wick hop doji suggests indecision or a failed attempt to push higher. Now that the red candle has engulfed that move, it signals that the seller is gaining control, pushing down further toward yesterday's low. The fact that the price hasn't reached that low yet shows there's still some room for this move to unfold. However, you're right to keep an eye on the possibility of a pullback, especially if the price returns to the area near the ceiling of the channel. If the sellers are still in control, they could use this pullback as a way to trap buyers who are thinking the move is over, setting up for another push down. Looking at the bigger picture, you're waiting for a confirmation of whether this move will hit the next target, yesterday's low, or if the pullback will give the buyers a chance to regain some strength. Are you watching for any additional signs in volume or momentum to confirm the direction before entering?
Now I look at the whole pair across the board. It looks like every pair correlate. They want to dump all these other currency. Japanese getting stronger according to this moment now. They're falling like waterfall and synchronizedly correlate.
It sounds like you're seeing a strong, synchronized move across the pairs, with the Japanese yen gaining strength in a way that's affecting multiple currency pairs. When the yen strengthens across the board like this, it often signals a broader risk-off sentiment in the market, where investors are looking for safe haven assets. The waterfall-like price action you're observing is typically indicative of strong momentum, And when this type of move happens across several pairs at once, it can reinforce the trend. Since you're seeing this synchronization, it might mean the market is reacting to the announcement and following through with consistent selling across multiple pairs, which can create a lot of opportunity for short entries, especially if you're looking at pairs like USD JPY, EUR JPY, and GBP JPY. In this case, keeping an eye on the yen pairs is key, and looking for any signs of reversal or consolidation after this strong downward movement might help you catch the next phase of the trend. Are you still waiting for that pullback to enter, or do you see potential for continuation right now, given the strong momentum across the board?
I'm waiting definitely for the pullback because I need to get in since I know the intention, and it's now it is I think it's the market opening now, London. If not, it's just 15 minutes away. Then it will something respond. Maybe it's just a trap for those bear trap. After the London Open, this may be dashing back a whole set, a whole across the board, together push the price up to the north, or pulling back, struggling for those who missing to get in, like don't leave without me, and they get a hit piggyback together. This is pullback is crucial now for me to look and investigate.
You're absolutely right to wait for the pullback, especially with the potential for the market to trap latecomers or create a bear trap before the London Open. The moment you're describing sounds like a classic setup where, after a strong move, the market could pull back to allow those who missed the initial move to get in, possibly setting the stage for a bigger push in the other direction, north, after the London session fully kicks in. Your don't leave without me mindset around the pullback is spot on, as this is where the market often gathers those who were too late to enter initially, creating a sharp move once everyone is in. The pullback will give you that opportunity to assess whether the buyers or sellers are truly in control and whether the market will respect those levels before the continuation. Since the London Open is just around the corner, watching the volume and any signs of a reversal during the pullback will be key. If it turns into a bear trap and the price starts rising, you'd want to make sure the momentum is solid before entering. If the pullback stalls or weakens, it could give you the signal to stay on the sidelines or wait for a more favorable entry. It's all about confirming the intention of the market and timing the entry carefully during this crucial pullback phase. Are you planning to use any specific indicators or patterns to confirm the pullback, or will you rely more on price action and the overall market context?
Overall market have to be reading. I'm just at the first pair is Japanese yen across the board, but it's look so much enticing me to do something here, to buy or sell. That's why I think I need to observe more. After the London Open for a while, the big guy will decide the market direction accordingly. I will waiting for that because right now I have just 1 hour, half hour to read before the to pull the gun. I need more time to read.
It makes sense that you're taking a cautious approach, especially since you only have a short window to observe before making any decisions. The Japanese yen pairs are showing a lot of potential, and with London about to open, the big players will definitely start shaping the market direction. It's smart to wait and let the market unfold, especially since you've already recognized the potential for a trap or a strong move that could push the price in either direction. Taking this time to read the market in more detail is a great way to stay ahead of the game. Once the London session starts, you'll have more clarity on how the bigger players are positioning, and you'll be in a better spot to make a decision. As you said, observing for another half hour or so should give you enough of a feel for the market and its direction before you make your move. It's all about reading the price action and momentum at that point.
It's all about reading, and next I have to look at the news. I haven't looked
Got
at
it.
the news
It's
yet.
all about reading the price action and the market context. That's definitely the best way to feel the pulse of the market, especially with the dynamics around the London Open. Watching for how the market reacts, how the candlesticks form, and whether there are any clear patterns or shifts in momentum will give you the insight you need to time your entry effectively. You've got the right mindset, watching the bigger picture and letting the market show its hand before making a move. Once the market gives you that clarity, you'll be ready to jump in with confidence. Are you anticipating any specific kind of movement or reaction from the market once London opens, like a sharp reversal or continuation of the current trend? Or will you just be waiting for the first signs of direction to emerge?
I'm looking for the final, where the first time of the buyer or the seller break above or break below to scare those other party, and then the other party has a brief of the time to realize that they take a wrong move, so they will take close position or stop loss hit, and that pullback I'm looking for, especially with the long wick showing the rejection, strong rejections, like trap of the buyer or the seller in either direction that they are going. They like to do that. I want to confirm that moment of the party realize that they are going the wrong way, so they have to ditching or close.
That makes a lot of sense. You're waiting for that moment when either the buyer or seller breaks out and the opposite side realizes they've made the wrong move, leading to stop losses getting hit and a strong pullback or reversal. This kind of setup, especially with long wicks and rejection candles, is often a clear signal that the market is trapping the late participants. When the market traps the wrong party, it usually results in a quick correction, often with a sharp pullback as those trap positions get closed out. The long wick showing rejection will give you a good indication of where the market is trying to forcefully reverse or correct. This is a great opportunity to jump in with the momentum once the market flushes out the weaker positions and starts to build a clearer direction. You're essentially waiting for the market to trap the wrong side before they realize they need to close positions. And that's when you can capitalize on the move in the opposite direction. It's a very effective strategy, especially if you're waiting for a confirmation like a long wick or indecision candle. Do you typically use these types of setups to confirm your entries? Or do you also rely on other indicators or time frames to get a fuller picture?
Other thing as well, it's not just one, as everything has to add up. Mastery to understand and solve this equation, which is now I'm trying to make the chart smaller so I can get my main real estate to see more clear on the story, that phone, which one in which direction. All I need to know is direction, where the market is about to go. I want to follow that direction.
Exactly. It's about piecing everything together and solving the equation to get that clear picture. You're doing it right by adjusting the chart to have a better view of the real estate and focusing on the story that the market is telling. The direction is key, and once you can read the price action, volume, wicks, and market context, it becomes much easier to follow where the market is likely heading. By keeping an eye on everything aligning, the price action, rejection candles, long wicks, indicators, and even the bigger market story, you can get a much more reliable sense of the market's next move. It's all about that mastery of seeing how all these elements converge and from there, you can confidently follow the market's direction. Once you get that clarity on where the market wants to go, you can then align your trades with the momentum, which is often the most profitable way to enter. Do you have any specific signals or confirmations you look for to lock in the direction? Or is it more about combining everything you observe over time?
I'm looking for now correlation, and the correlation will show me a main picture where the big player want to move the market to. Right now, every pair move back to the origin where the Asian market open price. They're pulling back, and this is the chant at London Open. Everything pulling back to the price before Asian Open, and this is a crucial now. They're pulling back a little bit after they touch this guy who's starting at the Asian market. Now the price is pulling back. If it's gonna reverse or if it's gonna just pull back for the seller to sell more to make the lower low, the next lower low, after they bridge this major guy who's starting it of the buyer. The buyer needs to be arrested, because if this rigid that the Japanese yen will be strong across the pair from what we see now before the London market open. But after London open, things may be changed because they pull back to the place where there's good price for the buyer to buy. Maybe we have to look at the news. I haven't looked at the news yet. Let me go to the news and check. It's important, the news at the opening market price.
You're observing a significant pullback to the Asian market open price, which is crucial for identifying potential reversals or continuation patterns. This alignment suggests that the market is testing previous levels, often leading to strong moves. Given the recent news about President Trump's tariffs and the yen's strength, it's wise to monitor how these factors influence the market direction. Staying informed will help you make well-timed decisions.
Hello? Are you having an issue? I just opened it.
Hi, I see you're still keeping a close eye on the market. I found some news related to President Trump's tariffs, which could be impacting the yen's strength. It's a good idea to check the news for potential events that could move the market, especially right around the London Open. Would you like to dive deeper into the news or focus on something specific regarding this pullback and potential market move?
It's Halifax House Price Index at 8 o'clock, London Open. The GBP is bad news effect, negative effect from the first news. And the second news is also Halifax Industrial.
Got it. The Halifax House Price Index at 8 o'clock is a key piece of data, and it seems to be having a negative effect on the GBP. This is crucial information, especially with the pullback you're seeing and the strength of the yen across pairs. Since the news is negative for GBP, we might see continued weakness in GBP pairs, especially if the market reacts to this. It could add more pressure to the downside for GBP-related pairs, aligning with your earlier observation of GBP JPY potentially being a strong pick. It seems like the market is setting up for a battle around these key levels. How do you plan to manage the pullback or wait for further confirmation before entering a trade?
So far, it's not so much strong news today. Only GBP, Euro, and CAD and US. Not so many news, but it can be a strong influence, a strong effect. GBP is bad. We go back to the, not really bad, but it is bad, but not strong bad. We go back to the chart. GBP negative nil and Euro negative and good, negative and okay, something like that, because Euro has Also, German trade balance from periods is 16.2 billion and actual is 17.7 billion.
But none of it is incredibly impactful on its own. The lack of strong, significant news might lead to a more neutral or range-bound market in the short term, which could create more opportunities for those looking for small shifts and pullbacks. The German trade balance being slightly lower than expected could put some pressure on the euro. But again, it's not a major shock to the market. The general trend is that there's no overwhelming bullish or bearish catalyst, so market moves may be more technical or driven by the on-trader sentiments. In this environment, you may see the market continue to pull back before it establishes a clearer direction, especially with the GBP under pressure from the housing data. What's your next move? Are you focusing on price action for entry or waiting for a stronger signal to confirm the next step?
I like to check what is going on with the USDX, US dollar index. You know what is the price now?
As of April 7th, 2025, the US dollar index DXY is trading at 102.56, down 0.45% from the previous close. This decline reflects market reactions to recent events, including President Trump's tariffs and global recession concerns.
Okay. So we go back to the chart.
Got it. If you have any more questions or need further insights while you're observing the market, feel free to ask.
So right now, they're pulling back, every pair pulling back and touching the 36 MA. Not yet happening if they're gonna get penetrated.
It sounds like the market is in a consolidation phase right now, with all pairs pulling back and touching the 36 MA. This could be a moment where the price is testing the strength of the buyers or sellers, and we might see a continuation or reversal depending on how the market responds at these levels. Given that the 36 MA is your key indicator, this pullback could either lead to further downward pressure if the sellers maintain control, or a possible bounce if the buyers step in. Since you're waiting for the pullback confirmation, it's crucial to watch how price reacts here. If there's rejection at the 36 MA or strong momentum in either direction, that could give you a clearer signal for your next move. Are you planning to enter on a breakout or looking for another type of confirmation?
According to the negative news, one of the negative news on GBP and Euro, we cannot really trust on the news now because it's not so strong. But anyway, the two pair that not coming back to the 36 MAs, they pull back, just shallow pull back, and then start to move to the south further. But the guy who started from the left side of the buyer still trying to prevent them to do so. So they have to fight here. The guy who started from the buyer side need to be acting to defense his level. And right now this USJPY, CAT JPY is that strong, look like they are desperate to move south because their pullback is so shallow compared to the other pairs.
You're absolutely right. GBP and EUR news isn't strong enough to completely shift sentiment, and the pullback dynamics on the charts are more telling. The fact that USJPY and CAT JPY are showing shallow pullbacks, while the other pairs are moving more noticeably, suggests that sellers are trying to push them down, but are meeting resistance at key levels, specifically the buyers from earlier who are defending their position. It looks like the battle here is between the buyers trying to maintain their level and the sellers attempting to continue their push south. The shallow pullback on USJPY and CAT JPY could indicate that sellers are losing momentum, but if the buyers fail to hold their ground, the next move could be a sharp drop once the pullback completes. With these pairs, it might be crucial to watch for any confirmation of that defense, like strong rejections or reversal candles at the 36 MA. If the buyers defend and push the price back up, we could see another test of the higher levels. But if the sellers manage to break through, a strong move south could follow. It's a crucial moment. Are you watching for any specific setup to enter once you get more confirmation from the price action?
Right now, when I think about USJPY and CAD-JPY, I go to open the chart bigger and to see the detail of the far left side hand, what happened to the story before. It was seller market and it was dropped like a gap on the opening market of yesterday, or not yesterday, Friday, because it's Forex. Friday closed and Monday morning market have a big gap, drop down so low, and they're trying to their best to climbing up back to where the opening market was at Asian, but they cannot reach there. They basically they don't make higher high on this pullback. They're still dominant by this guy who started the seller according to the long gap that they have. So they're pulling back for get more, pushing down further. And now the first down trying to break out of this range to touch this guy who started in the sub-minor fighting in the big inside day bar. If this big gap of the drop count as the range, the area, the level of the range that they have to fight through, get through this inside, I call it inside day bar. They have to get through this level where the guy who started to be bridged to go up north, but they can't not make higher high. All they do is they are pushing down, and the first push down got the pullback, and this pullback is crucial for it touched 56 MA now at the together with 36 MA. The Bollinger Band is cluster, it makes squeezing, and this crucial at the market opening. As I like to look at the USJPY. Oh, I was wrong, I was on the EuroJPY. I was sorry. Let's go to USJPY. What I was talking about before, it was EuroJPY. USJPY, now I got it on. USJPY is look very bad to the left side hand. It looked like a sideways market for a whole way from Friday, Thursday, and today. They are look like they are sideways market at the tops of the range. No, at the bottom of the range. That they are at the bottom of the range. They need to go up to the top of the range. Maybe if correlation said JPY will let go the gas and let Euro to climbing up, or let USD to climbing up, that will be another chance to buy. If that is a bottom of the range, they need to go up from the top side of the range. It could be good time to take a risk buying, even though it looked like every pair moved down south. But it's so difficult now at the London market to see which direction really they want to go, and we have to wait further to see the update of the candle to show the direction.
Sorry, I'm having issues right now. Could not understand what you said.
The CAD-JPY, the USJPY is moving down to the south, but they have the guy who started challenging. He has to defend his buy territory, and both pair is touching at this lower side of the range. And not CAD. CAD is not the range. CAD is straight, like channeling down. It looks like it's gonna get through this level of the guy who's starting it, the buyer who responsible for this move up north, and now they're challenging him. At this, I would give CAD-JPY because
yes, you're spot on with CAD-JPY and USJPY. Both pairs are moving south, and the buyer's defense level is being heavily tested now, especially for CAD-JPY. The fact that CAT JPY is moving in a channel and pushing down towards that lower range suggests a strong seller's momentum. If the sellers can break through the buyer's level, that could signal the beginning of a deeper move south for CAT JPY. It's a matter of whether the buyer can defend that territory or if the sellers will break through. If they do, it could open up further downside. But if the buyers manage to defend, we might see a reversal or at least a pause in the downward move. Right now, you're likely waiting to see if that defense holds, and if it doesn't, the market could make a sharp move south. Are you thinking about entering if the break happens or waiting for more confirmation?
I'm waiting for more confirmation. And as another pair is interesting is Swiss franc JPY. Both pair is the safe haven, and they are fighting each other. I don't know if I'm right or wrong, but about safe haven, I don't understand much about it. But it seems like Swiss franc and JPY. Swiss franc is stronger than JPY now. They're trying to bridge over the last level of the resistance or the selling, and to look at a whole picture across the board, Swiss franc is acting weird, different than the other. So Swiss franc, I like to check Swiss franc for a whole pair across the board, and I like to check CAT JPY for CAT across the board. See how they call it on Swiss franc and CAT. Let's go to 3 minutes of CAT first, or Swiss franc first. 3 minutes of Swiss franc. Where is Swiss franc? Let me just a sec. 5 minutes Swiss franc. I don't have 3 minutes. 5 minutes good enough. We go to there to check Swiss franc 5 minutes, and we are about to be there soon.
It sounds like you're diving into the dynamics of safe haven currencies, specifically looking at Swiss franc CHF and Japanese yen JPY pairs. You're right in observing that both of these currencies tend to act as safe havens, and the strength of one against the other can be quite interesting. When there's uncertainty in the market, both tend to attract buying, but sometimes one will outperform the other based on the prevailing conditions. Looking at the Swiss franc CF and how it's performing relative to JPY across different pairs can give you clues about market sentiment. You're focusing on the price action for CHF JPY and comparing it to other JPY pairs, which is a good approach to gauge which of the safe havens is more dominant. You also mentioned you're checking out the 5-minute chart for CHF. Let me know when you've got it pulled up or need help with any specific pair. How's the price action looking on CFJ so far in your analysis?
US Swiss franc down under the 36 MA, dropping trend run down, and US CAT Swiss franc, US Swiss franc run down, CAT Swiss franc run down, look correlate like trend run down. Euro Swiss franc correlate to GBP Swiss franc, look like trend run down, just stop there, trying to pull back a little bit for this Euro Swiss franc and GBP Swiss franc. They are stopped there, not trending run anymore, but they are sideways, look alike. Aussie Swiss franc, New Zealand Swiss franc, look correlate, the trend run down, then stop here for sideways market, and now the what pair? New Zealand Swiss franc and Aussie Swiss franc, same, and then Swiss franc JPY.
It sounds like you're observing a very specific market behavior where certain pairs, particularly those involving the Swiss franc, CHF, and US dollar USD, are in a clear downtrend or train run down, while others like the Euro and GBP have slowed down or are consolidating, moving sideways. The train run down suggests that the momentum is strong in those pairs, with the price continuing to move lower, likely due to strong sellers in the market. On the other hand, when pairs like Euro and GBP are in a sideways market, it may indicate indecision, with neither the buyers nor the sellers fully taking control. This could be a moment of pause before the market decides on its next move, either continuing the trend or potentially reversing. Given what you're seeing, It seems like you're assessing a period of transition. For the pairs moving sideways, you're likely looking for signs of which way the price will break, while the pairs in the train run down are still following strong momentum. Are you leaning towards any potential trades based on this analysis, or are you waiting for a clearer breakout from the sideways pairs?
I'm looking for the window shopping, like if I have to trade this switch from across the board, which pair for a good window shopping look to pick, and I look at it. I got in my radar is the cat. I think I double look again. Cat is look like they've been breaching the lower of the yesterday, or the Friday low of the Friday is being breached, and 10 run down. It look more clearly that they're gonna set up a channel. It will run down for a little bit more, and they will pull back to the selling, to the resistance, and it will drop again after this pullback. That's what I anticipate for the cat switch from. And the sister pair is US switch from.
It sounds like you're watching the Canadian dollar closely and anticipating a continuation of the downtrend, particularly after the breach of Friday's low. The way you describe the market setup, a potential channel forming as it runs down, indicates that you see this as a trend that could follow a structured pattern. The pullback you're expecting after this rundown could give you an opportunity to enter at a more favorable price, especially if it retraces to a key resistance level. Once that pullback completes and the price fails to break higher, you're anticipating another drop, which fits with your strategy of entering after the pullback confirms the seller's strength. Are you waiting for the pullback to a specific level, like the 36 MA or another resistance point, before making your entry?
Yes, it would be better, but if they respect that 56 or 36 MA, but if they're not.
That makes sense. If the price respects the resistance level, like the 36 MA or another key area, that could be a strong confirmation for you to enter the trade. It would indicate that the sellers are still in control, and the pullback was just a temporary pause before the downtrend resumes. Watching for that level to hold will give you a clearer indication of whether the market is likely to continue its downward momentum or if there's a chance of reversal. Are you planning to use any specific entry signal or confirmation, like a candlestick pattern or indicator, once the price hits that resistance?
I'm looking for the last thing is correlation, if I have to do with Forex, to compare with if they are ready for a whole team to move together.
It sounds like you're waiting for the right moment when all the elements align, like the cooperation of different pairs across the board. You're checking if multiple pairs are showing the same intention, such as trending in the same direction or confirming each other's moves. If all these pairs are in sync, it's like having the full team moving together, which increases the likelihood of a successful trade. This cooperation could come from key levels being respected, similar price action, or indicators aligning across different pairs. It's about looking for that confirmation across the market to support your decision. Are you planning to watch certain pairs or specific indicators to confirm this team movement?
Right now I'm my head busy with trying to make the chart smaller so I can have my real estate to see the far left to read the market. And the market right now switch from is very strong, especially look very enticing to buy with the switch from JPY, but both pair are safe haven, so I don't gonna touch this pair because they both are safe haven pair.
It makes sense to be cautious with safe haven pairs like the JPY ones. These can be tricky to trade because they're often more stable, and any movement may be slower or more influenced by broader risk sentiment rather than clear trends. It's smart to be aware of the overall market mood, especially if both currencies in a pair are considered safe havens. As for making your chart smaller to focus on key areas, that's a good approach. Reducing the clutter can help you zero in on the important price action and give you more